Alright, today we will discuss IAS 16, International Accounting Standard 16, Property, Plant, Equipment. You know property, plant, equipment very well, so I don't need to elaborate the words, but now I'm explaining these terms and accounting language. What is explained in accounting for property, plant, equipment? Okay, IAS 16 establishes principle for recognizing property, plant, equipment as assets. As you know that uh, these are tangible assets. Tangible assets are those assets which we can touch. All right. IAS 16 establishes principle for recognizing property, plant, equipment as an asset. IAS 16 recognize property, plant, equipment as asset. You know, recognition is all over based on the standards. You recognize something as a liability, or you recognize something as an asset, or you can recognize something as an income, or you recognize something as an expense. Whatever the situation is. Measuring their carrying amounts and measuring the depreciation charges and impairment losses to be recognized in relation to them. As you know that when you take asset and it is tangible assets which you can touch, which will give you benefit in the for the future period, so that must be depreciated. If you suppose buy a generator for 10 lakh, all right, so the depreciation of that, so the useful life of that generator is 10 years. So per year, how many part of the generator you should have to depreciate? 1 lakh. All right, the useful life is 10 years. Recognize relation to them. Property, plant, equipment are tangible items. As I said earlier, that these are tangible that are held for use in the production or supply of goods or services. Assets are held for use in the production or supply of goods or services, for rental to others or for administrative purposes, and are expected to be used during more than one period. The most important thing about the assets that these are this sentence. Look and focus on this sentence. I just highlight this sentence for you people to understand better. Are expected to be used during more than one period. It means that these assets are non-current assets. Property, plant, equipment are non-current assets, and these are tangible assets. Okay. Property, plant, and equipment include various plants related to agriculture activities. And in the next video, I'm gonna explain IAS 41 agriculture, and then I have to show you the differences, the distinctions in between IAS 41 and IAS 41 and IAS 16. What are the differences in between these two standards? The cost of an item of property, plant, and equipment is recognized in an asset if and only if the cost of item of property, plant, and equipment is recognized in an asset. The reason is given below. It is probable that future economic benefit associated with the item will flow to the entity. The benefit that you will take from the property, plant, equipment. You have a plot, or you have a land, a piece of land, and you have a building, you have plant and machinery. So the future economic benefit that is associated with these type of items will flow, the profit will flow toward the entity in the income statement or any other financial statement. The cost of item can be measured reliably. The cost will be reliable to be measured easily and conveniently. An item of property, plant, and equipment is initially measured at its cost. Cost, this is very important thing, and this is one of the multiple choice questions. We have also been tested in this sentence that property, plant, equipment is initially measured at dash, means at what thing. So at cost, it will measured initially at cost. It is very important point. And what the cost includes, it's purchase price including imports duties. First you have to purchase it and then import duties. When you import it, when you purchase it, you have to bear some cost and non-refundable purchase tax when you purchase it. So you have to give amount of tax to the government for that purchase after deducting trade discount and rebates. Any cost directly attributable to bringing the asset to the location and condition necessarily for it to be capable of operating in the manner intended by management. It means that whenever you buy or purchase an asset and you want to use it in your daily operations, first of all you have to make it capable, able for your use. For making that asset able for your use, you have to bear some extra charges, some extra amounts uh, to make the asset capable of your use. You have to modify that, you have to bring that to your store, to your warehouse, whatever place you set for your business, for your activities. All right, the estimated cost of dismantling and removing the item and restoring the site of it which it is located, unless those costs relate to inventories produced during that period. Alright, this is all about IAS 16 property and plant equipment. When I will explain IAS 41 agriculture in next video, then you have to be cleared about the differences in between IAS 16 and IAS 41. What items, which asset is included in IAS 16 and which are categorized in IAS 41. You will have to be clear about it. Thank you very much.